Welcome to your daily solo 401k webinar and Q&A session with my solo 401k financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic, 2025 solo 401k setup deadline, the definitive 1231 guide to keep all 2025 solo 401k contribution options open. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor is a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. This is your chance to get answers. Please use the chat now to ask questions on today's topic or anything else. Again, please chat them over now so that we can be sure to get to them all. Let's get started. And before we get started, if you're enjoying this session today as we go through it, please take a moment just to like on whatever platform you're on, whether you're on YouTube or LinkedIn or Instagram or X, as that helps us to get the word out to other solopreneurs and advisors like yourself. All right, let's start out with the foundation, which is solo 401k eligibility. In order to be eligible to set up a solo 401k, you need to be self-employed with no non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. So there are two prongs, essentially. You have to have the self-employment activity, which you would demonstrate that by reporting earned self-employment income on your taxes. Now, you don't have to operate through a formal legal entity. We have many, many clients who operate without a formal legal entity. They operate as a sole proprietorship. In that case, you would demonstrate earned self-employment income by reporting income on Schedule C of your taxes. Now, if your business is taxed as an S Corp or a C Corp, earned self-employment income would be the W-2 wages that you receive from the S Corp or the C Corp. Lastly, if your business is taxed as a partnership, earned self-employment income is the income reported on line 14 of the K-1 that you receive from the partnership. The other eligibility prong is not having any full-time W-2 employees, other than, of course, yourself or a spouse, if any, or even another business partner, as long as they're a 3% or more business partner. So in other words, you cannot have any non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. Ultimately, this will be a solo 401k can be ideal for self-employed individuals who operate as consultants, as realtors, as freelancers, and other small business owners. In terms of the eligibility checklist, we'll just hit a couple of the FAQs. Number one, we hit already, you don't need to have a formal legal entity. You do need to report earned self-employment income. No, there's no minimum amount of earned self-employment income that you would need in order to be eligible to set up a solo 401k. Your spouse or business partner can participate as long as your spouse or business partner are reporting their own earned self-employment income. You can have a solo 401k even if you have a W-2 day job, even if you participate in your W-2 employer-sponsored plan, as long as you've got that separate earned self-employment income. So now let's turn to the critical 2025 deadline, which is December 31st. And this is a key date. So in order to preserve the ability to make the most types of contributions for 2025 with the most amount of time during which you have to make those contributions, you need to set up a plan. You need to sign up, in other words, by December 31st, because as part of our process, we establish the plan within the same business day when someone signs up. So the critical deadline is to sign up by December 31st, 2025, to preserve the ability to make all types of 2025 solo 401k contributions, whether employee, employer, or voluntary after tax, by your 2025 self-employed business tax return deadline, including extension in 2026. So you can set up a plan after the end of the year, but you'll start to lose the ability to make all types of contributions with the most amount of time. Now, we make it super easy to meet the deadline because it's just a simple 3-step process to sign up with us. And when you sign up with us, you've met the deadline because we established the plan within the same business day. So the process is, number one, to complete the online application, which you can find quickly and easily at my solo401k.net. Click on open account and then choose solo 401k. It's just 10 simple questions. That's how we capture the information we need to prepare the documents. So once the application is submitted and payment is made, we draft the solo 401k plan documents the same business day. We then send you an email with a link to those documents on our secure document portal. So you just need to simply download the documents, sign the documents, and you've met the deadline. You can take your time to return the documents to us. Of course, we'll want a courtesy copy. We also will help you open up accounts at the bank or brokerage of choice, and you will find an upload link as well as a link to our next steps questionnaire where you tell us where you want to have the new accounts at in that same email that goes out the same business day when you sign up. But you can take your time to return the completed and signed pages. You can take your time to let us know where you want to open up the accounts at, because again, as long as you sign up by December 31st, 2025, you'll preserve the ability to open up accounts and make contributions by your business tax return deadline, including any timely filed extension in 2026. So the completion of these above 3 steps by December 31st is going to result in the following, right? You're going to be able to make all types of contributions, whether it's employee contributions, employer contributions, even voluntary after-tax contributions, which is how you make Mega Backdoor Roth contributions. And you'll have that ability to open up the accounts and make those contributions in 2026. You can take your time, right? The rules are different for self-employed individuals. Unlike a full-time employer plan where you have to make employee contributions by the end of the year, by December 31st, for self-employed individuals, you have more time. And it makes sense from a policy perspective because your ability to make contributions is based off of your earned self-employment income. And many individuals won't know what their earned self-employment income is until after the end of the year, right? They might have a seasonal business where they're very busy at the end of the year. So they might not know exactly how much they've made until after the dust is settled and until the first part of 2026. So it makes sense that you'll have time to open up the accounts, determine exactly how much you can contribute and how much you want to contribute by your business tax return deadline, including any timely filed extension in 2026. And this is going to preserve the ability to contribute up to $70,000 for 2025 or even more if you're age 50 or older. If you're age 50 or older, you can, and you have the earned self-employment income to justify it, and you haven't made the catch-up contribution to another plan like a day job plan, then you can make that catch-up contribution to the solo 401k. For those age 50 or older, the catch-up contribution amount is an additional $7,500. If you're age 60 to 63, now you can also make what's called a super catch-up contribution amount, which instead of $7,500 is $11,250, raising the potential contribution amount to $81,250 for 2025. So let's continue to go over those steps just to really understand it. So again, the first step is to submit the online application, which you can find easily and quickly at my solo401k.net. Just click on open account and then click on solo 401k. So the key here is to establish the plan. The way that you establish a solo 401k plan is to create the documents. A 401k plan is a legal entity. So like any legal entity, it's the documents that create it. It's not the accounts. It's really the documents. So we need to draft solo 401k plan documents specifically for your self-employed business. And the way that we capture the information that we need about your business is through that online application. So it's, again, just 10 simple questions, submit the information, make payment, and then we prepare those documents within the same business day. So those documents are going to include, of course, the adoption agreement, the trust agreement, a copy of the IRS favorable determination letter, which confirms that the plan is a qualified plan. So in order to be able to make contributions that you can deduct on your taxes, you need to make those contributions to a qualified plan, and the IRS determination letter confirms that the solo 401k plan established for your business is a qualified plan. Now, that trust agreement, that will appoint you as the trustee, allowing you to make all investment choices. So we, my solo 401k financial, we are the solo 401k plan provider. So we have the IRS approved plan documents that we use to create the plan for your business, but we don't hold your money. We're not providing investment advice. So ultimately, the solo 401k owner, the self-employed individual, is the one that has the control. Now, as part of the establishment process, the IRS expectation is that a separate employer identification number is obtained for the solo 401k. This is different and distinct than an EIN number that you might have for your self-employed business. You don't need to have an EIN number for your self-employed business in order to be eligible to set up a plan. So for example, in the sole proprietor scenario, all you need is to report earned self-employment income on your taxes. You don't need to have a separate EIN number for your business, and you might not have had occasion to need one. For example, if you never pay contractors, etc. But as part of the solo 401k establishment process, a separate EIN number will need to be obtained. Now, that EIN number does not need to be obtained by December 31st. It just needs to be obtained at the time that the accounts are being opened. And as we've already established, all that needs to be done by the end of the year is to establish the plan. And the way that that is done is through the documents, not opening up the accounts or making the contributions. So you'll get an email when someone signs up and submits the application and payment. We send out an email within the same business day with a link to our secure portal where you can download the documents that were specifically drafted for your business, sign the documents. You can use an electronic signature software if you have access to that. You can upload the documents right away, those completed and signed pages, because there'll be a secure upload link in that email. But you could also take your time to upload the documents once you're ready, for example, to open up the accounts, which by establishing the plan, by signing up with us by December 31st, you'll preserve the ability to open up those accounts and make all types of contributions for 2025 by your business tax return deadline, including any timely filed extension in 2026. Now, once you're ready to open up the accounts, you can go ahead and return those completed and signed pages. Again, they can be signed electronically. There'll be a secure upload link in that same email that you would have received when you signed up. You can then submit the next steps questionnaire, which is linked in that same email that you would have received the same business day when you first signed up. And that's how clients or their advisors will let us know where they want to open up the accounts at. Because as I mentioned, we are the 401k plan provider, but we don't hold your investments. We don't provide the accounts. We don't have access to your accounts. But at the same time, we are very hands-on in helping customers open up the accounts so they can have accounts at the bank or brokerage of choice. For example, we've helped customers open up accounts at hundreds of different banks, credit unions, brokerages such as Fidelity, Schwab, or if you're working with advisors, Altruist, LPL, Fidelity Institutional, Schwab Institutional. We're neutral as far as where the accounts are opened up at. But again, we're hands-on in helping clients and their advisors open up the requisite accounts. So for example, we will prepare the paperwork that's needed to open up the requisite number of accounts. And you might need to have multiple sub-accounts. So for example, if there are two participants, let's say it's a husband and wife, both working in the business, both participating in the solo 401k, it would be one plan, but there would need to be two separate accounts, one for each solo 401k participant. Or let's just presume that there are multiple types of funds in the solo 401k. They might have pre-tax funds that they rolled over from a former employer plan or a non-Roth IRA, in which case that would roll over into the pre-tax solo 401k sub-account. Or they might be looking to make Mega Backdoor Roth solo 401k contributions as well, in which case they would need two different sub-accounts, one for voluntary after-tax contributions, and then another account for Roth solo 401k funds. Because when you make a Mega Backdoor Roth solo 401k contribution, it first goes into an after-tax account, and then it gets moved over to a Roth account. So there's many scenarios. We have many clients that might have 3 accounts for each participant, a pre-tax, a Roth, and an after-tax. So as part of that next steps questionnaire, we ask you, okay, what do you want? So if you say you want to do Mega Backdoor Roth at Schwab, and there's 2 participants, we would prepare the paperwork to open up 6 different accounts. And then we would also, as part of that onboarding process, once we receive the completed and signed documents, as well as the response to the next steps questionnaire, we go ahead and get the EIN number specifically for your solo 401k plan. We obtain that EIN number from the IRS system using their online system to obtain that EIN number. Now, once the accounts are opened up, it's time to fund the account. So those solo 401k accounts can be funded in different ways. They can be funded via rollovers. So if you're rolling money over from a former employer plan or a non-Roth IRA, under the Roth IRA rules, one cannot transfer funds from a Roth IRA to any type of 401k, including a solo 401k. But you can transfer Roth money that comes from a former employer plan. So that individuals might be transferring both pre-tax and Roth money from a former employer plan, in which case the funds will typically transfer via 2 separate checks. And then the solo 401k owner would deposit the pre-tax transfer check into the pre-tax solo 401k sub account and the Roth transfer check into the Roth solo 401k sub account. So that's one way to fund the account, by transferring money from pre-existing retirement accounts. Another way to fund the accounts is by making contributions. And as long as you establish the plan by December 31st, 2025, you'll preserve the ability to make all types of contributions, whether employee, employer, or voluntary after tax, by your business tax return deadline, including extension in 2026. And that's confirmed by IRS publication 560, which is the landmark guidance for self-employed retirement plans, where it confirms that self-employed individuals do have that additional time to make all types of contributions as long as the plan is established by the end of the year. Now, what do I have to do by December 31st? All you need to do is establish the plan. We make it easy to do that because we prepare the documents, which is how you establish the plan, is the documents within the same business day. So it's just simply a matter of submitting our online application and making payment, and we'll establish the plan that same business day. So then you can take time, you can take your time to open up the accounts and make the contributions by your business tax return deadline, including any timely filed extension in 2026. Do I have to open the bank or brokerage account by the end of the year? No, you don't. All you need to do is establish the plan, meaning create the documents. That's what creates a 401k plan. It's a legal entity. So like any legal entity, it's the documents that create it. You can take your time to open up the accounts, obtain the EIN number, which we do as part of the onboarding process, as well as make contributions sometime next year, as long as you do it by your tax return deadline, including any timely filed extension in 2026. Do I have to obtain an employer identification number by the end of the year, by December 31st? No, you don't. That's not what creates the solo 401k. That's not what establishes the solo 401k. All you need to do by December 31st is establish the plan. The plan is established via the documents. You'll need that EIN number when it comes time to open up the accounts. But again, that can happen in 2026. And we obtain that EIN number as part of the onboarding process when you're ready to open up the accounts. Is the tax return deadline my personal tax return deadline or my self-employed business tax return deadline? That's a great question. There is some confusion sometimes around that. Let's assume, for example, that the self-employed business is a business that's taxed as an S corporation. In that case, the S corporation deadline is March 15th or September 15th if you file an extension for your S corporation tax return, the 1120S. So the entity that sponsors the solo 401k is your self-employed business. So if your self-employed business is taxed as an S corporation, then the key deadline is the self-employed business tax return deadline. So if you establish the plan, you sign up by December 31st, Now you'll have until March 15th to make all types of contributions for 2025, or September 15th if you file a timely extension for your S corporation tax return, your 1120S. Now, of course, if your self-employed business is taxed as a sole proprietorship, you might not have a formal legal entity, or maybe it's a single member LLC that's taxed as a disregarded entity. So all your self-employment income flows through to your 1040 and is reported on Schedule C. In that case, your 1040 is your self-employed business tax return. In that case, the self-employed business tax return deadline is the 1040 deadline. So in that case, it would be April 15th or October 15th if you file a timely extension for your 2025 1040. Now, if I adopt a plan in December of 2025, how can I make contributions based on income that I earned in January 2026? Well, the industry best practice is for the solo 401k plan to be effective as of January 1st, 2025, even if you adopt the plan in December. Therefore, one is able to make contributions for any self-employment income earned and reported for 2025. My CPA tax advisor is informing me that the employee contribution must be made by December 31st, 2025. Are you sure that I can make this contribution in 2026? This is a common point of confusion because the employee contribution deadline for a full-time employer plan, so one that you might have, for example, at a job in corporate America. If you work for a company that offers a 401k plan, the employee contribution deadline is the end of the year. But the rules are different for self-employed individuals. And this is clear and clarified and confirmed by IRS Publication 560, which is the landmark guidance for self-employed retirement plans like a solo 401k, where it makes crystal clear that as long as the plan is established by December 31st, the individual will have until their business tax return deadline, including any timely filed extension, to make all types of contributions for 2025, including employee contributions. So you'll have time, and it makes sense, right? Because as we discussed above, many self-employed individuals don't know exactly how much they've made until after the end of the year. Can I make a Roth conversion for 2025 anytime up until my tax return deadline in 2026? So a Roth conversion is not a contribution. This is where someone has pre-tax money in their solo 401k and they want to convert it to a Roth status. So you would need a plan like the one offered by my solo 401k financial that allows for those in-plan pre-tax to Roth conversions. So our plan certainly does allow for that. You would literally move the funds from the pre-tax solo 401k sub account to the Roth solo 401k sub account, but it'll be reportable, it'll be taxable for the year that the conversion is made. So if the individual wants to have that be a taxable event for 2025, they would need to convert the money from the pre-tax account to the Roth account on or before December 31st, 2025. And then they would submit the form on our website that we use to capture the information we need to prepare the 1099-R, because that's going to be both taxable as well as reportable. It's reportable on a 1099-R issued by the plan. And then the individual would take that amount and add it. It would give it to their tax advisor so that the amount could be added to their income for 2025. So we prepare that 1099-R as an optional free service for our customers. They just need to submit the form on our website to give us the information we need in a timely fashion so that we can add it to the queue to prepare the 1099-R. All right, so that takes us to the end of the slides that we wanted to share. Thank you so much for joining. We're going to turn to the questions that are being chatted up. Thank you so much for bringing the questions. If this information is helping you feel more confident about your future, please take 1 second to like and subscribe. Liking tells the platform that the content is valuable, which helps other solopreneurs like you find it. Subscribing guarantees you get notifications of all of our crucial content that we deliver every day to help you secure your retirement. So please like us on YouTube or LinkedIn or X or Instagram, wherever you're checking us out at. Thank you so much. Now let's go to the questions. So our first question here, what if I don't want to liquidate positions in an existing traditional IRA? Can I just roll over the securities into the 401k? So our plan would definitely allow for an in-kind rollover from a traditional IRA to the pre-tax solo 401k sub account. You would just need to have an account for the solo 401k for pre-tax funds that can hold those securities. So let's just say it's publicly traded securities, right? Netflix stock or something like that. And let's say you have an IRA at Schwab. As part of the onboarding process, we ask our customers, okay, where do you want to have the new accounts at? So if you choose Schwab, then we will help you open up an account, a brokerage account at Schwab for the solo 401k. And you can designate one as the pre-tax solo 401k sub account. And then you could certainly, because that brokerage account at Schwab will certainly allow you to hold publicly traded securities. And then we'll help prepare the transfer paperwork to transfer the asset in kind from the IRA, from the traditional IRA at Schwab, to the new brokerage account at Schwab for pre-tax solo 401k funds. Next question, husband and wife LLC filing as sole proprietor. Currently have personal investment, Roth, and rollover IRAs at Schwab. Will want to set up the 401k accounts under the same existing logins. When we are ready to make the 2025 Roth contribution in 2026, can this just be handled by transferring the money directly from the personal investment account directly into the Schwab Roth 401k? Yes. Note that the personal Schwab account is only under the husband's name currently. So yes, assuming that you're transferring from a pre-tax, or I should say, a non-retirement account at Schwab. So you're transferring funds from a non-retirement account at Schwab to the brokerage account set up at Schwab for Roth Solo 401k funds, number one, assuming that you establish the plan, so you sign up by December 31st. Number two, assuming you're eligible to set up a solo 401k, if it's going to be the husband would need to be reporting earned self-employment income, such as filing a Schedule C. If the wife also wants to participate, the wife would need to have a Schedule C and then not have any non-owner, non-spouse employees working for any business owned by either spouses. So that clarifies that establishes that both can participate in the solo 401k. They can establish a solo 401k. Each would have their own Schedule C to demonstrate their self-employment activity. A separate account would be set up in the name of the solo 401k for the benefit of the husband. And then based on the husband's earned self-employment income, the husband's age, whether the husband makes contributions to another plan like a day job plan, and we field those scenarios every single day, then the husband could make a Roth contribution subject to the contribution limits, etc. And the husband could certainly fund that Roth contribution from a non-retirement brokerage account at Schwab. Hopefully that makes sense. If it's going to be for this, if let's assume you wanted to make, the wife wanted to make a contribution, Schwab may not allow that transfer to occur. So you may need to set up another non-retirement account at Schwab in the name of the wife, move the money to that account, and then move the money from the non-retirement account for the wife to the wife's brokerage account in the name of the solo 401k for her benefit for Roth solo 401k funds. From a solo 401k perspective, it would be acceptable, but my concern is that Schwab may not allow it just based on their own procedures. Thank you for the great participation. We want to take a moment to invite you to our community. We have the largest community of solo 401k owners, interested individuals around solo 401k plans with over 30,000 members. We have vibrant forums. We have a library of videos and webinars. So there's a ton of ways to learn and to share the knowledge. It's totally free to join. All are welcome. You don't have to be a customer. You could be an advisor. You could just be interested in the topic. You can join quickly and easily at mysolo401k.net/my community. So please don't hesitate to join. I know the first year setup fee is $650 to set up the solo 401k, along with the associated brokerage accounts, and yearly compliance fee is $125. Right now, we just want to set up 6 accounts at Schwab and probably 1 Chase bank account. So a total of 7 accounts in 2025. In the future, a couple of years down the road, if we want to set up an account under the solo 401k trust for crypto, will my solo 401k fill out those forms with the company? So our ongoing support certainly includes helping to set up additional accounts in the future. It's all a flat fee. It's not a function of the support you need. Now, and we definitely help customers open up accounts at a cryptocurrency exchange. Typically, it's an online process where the customer needs to submit the information, but we can help with screenshots or answering questions. We've got guides that at least convey the concepts, the key concepts from a solo 401k perspective. I know that a lot of those cryptocurrency exchanges will change their onboarding process seemingly on a semi-regular basis. But most certainly, we will help you do that. Now, I would note that while we have helped customers open up accounts at hundreds of different banks and credit unions, based on experience and client feedback, Chase typically won't open up accounts. I would say won't open up accounts for a third-party solo 401k plan. But of course, there's many other good options out there based on client feedback and experience. All right, we'll give it a moment to see if any more questions come across. Again, if you could please like the video on whatever platform you're on, that would be greatly appreciated. Thank you so much. Helps us to get the word out. All right, well, that's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this community. We'll be back here tomorrow with more crucial content to help you secure your retirement. So, final question that came in here, what about just a Schwab checking account? So I know Schwab has their own bank, but they typically won't open bank accounts for a third-party solo 401k plan. But with that stated, the brokerage accounts that we help our customers open up at Schwab do come with a free checkbook. So you can at least have checkbook access to those brokerage accounts. Great question. All right, until next time, everyone, take care.